Thank you very much, and good morning. It's fantastic to be here. I'm excited about this conference and looking forward to it. Despite the early challenges with technology, when it goes wrong, it can go really badly wrong. And so, if you're joining us online and I've been struggling to connect, our apologies. But trust that you'll enjoy this session. I do have some slides. I'm just wondering if the tech team can arrange those, but I'll crack on anyway. Yeah, I'm particularly excited about this convention because of the theme of it, of greening the financial systems, which is a topic that I am personally passionate about, and which FSD Africa does a lot of work in that space. We think a lot about it, and we work a lot on greening financial systems, on seeing finance flow to green. And so it's an important topic, and one that as actuaries we should be engaging very heavily with. And so excited for these 2 days together. And in terms of the agenda for today, I'm going to kind of just give you an introduction to the global environmental crisis that we are currently experiencing. I'm going to talk about how that affects Africa, Africa being the most vulnerable continent in terms of climate change and nature-related risk exposure. And then also just talk about the role that finance plays in dealing with that challenge, the role that actuaries have to respond to it, and why that actually represents a really great opportunity for Africa. So we're going to talk a lot about the risks, but at the same time, there's an amazing opportunity as we respond to this climate crisis. And I think maybe the overall message that I want to bring today is that this may be the most important challenge of our lifetime. And one that as actuaries we can respond to because we have the necessary skill sets, and one that we must respond to because of the urgency. And I'm not the only one who says that. If we go to the next slide, you'll see the World Economic Forum's Global Risk Report. If you can go to the next slide, and on that risk report, you will see a lot of different risks displayed. I know you can't see all the detail, but on the y-axis you have impact, and on the x-axis you have likelihood. And so top right quadrant are the highest risks, and they're color-coded. And so probably all that you can see is that they're green, and that means they're environmental. And because you can't see them, I've listed them there for you. And so you can see that climate and nature-related risks are the biggest long-term risks that we face. And so this is the challenge of our lifetime. It's a thing that as actuaries we need to be very carefully considering, because we are experts in long-term complex risks, and these risks are certainly complicated and they are long-term, and so we need to be investing our skills and energy in trying to solve them. And so I think this convention is timely. The theme of it as we get into this, and I'm also aware, though, that as we come to talk about this, that many actuaries are at different points of your journey in terms of understanding climate and the risks that are faced, and understanding the intersection of finance with that and the role that we can play. And so I don't want to just assume that everyone is in this space. And maybe some of you are just all day in IFRS 17 and in your spreadsheets, and there's kind of the broader perspective and the wider fields is not something that you consider a lot, but it needs to be. And so maybe this convention can be the beginning of your journey into issues of sustainability. And so I really just want to, without assuming anything, start from some of the basics and just talk about the current environmental crisis that the world is in, and some of the climate science and then the interaction of that with finance. And so very simply, the planet is warming. Over the last 100 years or so, the average temperature across the globe has increased by about 1 degree after a long period of very consistent temperatures. And that is caused by greenhouse gas emissions, the main culprit being carbon dioxide. And these greenhouse gases trap heat in the atmosphere so that the earth warms. And greenhouse gas emissions are mainly caused by fossil fuel burning, so oil, gas, coal, and the likes of that. And projections are that if we continue to emit as much carbon dioxide as we currently are, if we don't change anything, that by the end of this century, the earth could have warmed by another by about 5 degrees, which would largely be catastrophic for life on Earth. And so this is undoubtedly a crisis. It's something that we need to respond to, and we need to respond to now, because whatever we do now is kind of locked in for decades to come. You can't just remove the carbon from the atmosphere and decrease temperatures in a short time period. These are long-term systemic risks that we're talking about. And the consequences of warming for the planet are many. It results in extreme weather patterns. We're already starting to see the outworking of many of that. You have change in precipitation because a warmer atmosphere holds more moisture, and so you have higher rain, you have more fierce tropical storms. In other parts of the world, it results in droughts like we experience here in Kenya. Warmer oceans are a result. Acidification of the oceans happens as more CO2 is absorbed by the ocean, which is really devastating for coral and marine life. And you also have rising sea levels, you have heat waves. And so there is a lot of impacts that are occurring because of a warmer planet. And so this is something that the world needs to collectively respond to. These are significant risks and we need to respond. And so we've been slow as a global community to respond to this. The 2015 was a pivotal moment in kind of global climate negotiations where for the first time there were real commitments put on the table by the international community in terms of reducing emissions, but there is still a very long way to go. That was COP21, the UN Conference of the Parties. We're now in the middle of COP26 in Glasgow, and there's still a lot of work to be done, because what we need to get to is net zero. And net zero is where the carbon that we emit into the atmosphere is offset by the carbon that we take out. And there's a number of ways to take it out of the atmosphere. The primary one is actually just through nature, through photosynthesis. Trees absorb carbon and are a very good source of removing it from the atmosphere. But what we need to do as an international community is to get the overall temperature increase to remain below 2 degrees. And so that was the real goal of the Paris Agreement. And to do this, we need to do two things. We first need to mitigate the effects of climate change, which means reducing our impact on the climate. And so that means essentially reducing our emissions, getting to net zero. We also need to what's already occurred, and so that is managing climate's impacts on us, and that's things like building resilient infrastructure that can withstand nature's shocks. It's things like disaster risk finance, and instruments like insurance are key in that. And you can actually stay on the previous slide on all of the risks, because I'm just giving a kind of a brief intro to climate as we talk about these risks. You also see nature-related risks there. And so these are less talked about, but equally important. And those are caused by us using our natural resources unsustainably. And so since 1970, human activity has accelerated the rate at which plants and animals are going extinct by a factor of 100. And our use of natural resources on an annual basis has more than tripled. And so that is causing an unprecedented loss of natural ecosystems, which we are vitally dependent on for much of our economy. And the COVID-19 pandemic is actually a really good example of how nature-related systemic risk can have devastating consequences and how large the resulting impacts can be. It's because of the continued destruction of natural habitats that brings humans and wildlife into closer contact that increases the likelihood of pathogen transmission to humans, zoonotic diseases like COVID-19. And COVID-19 also demonstrates to us the impact that globally integrated events can have on economies and financial systems and the importance of preparedness. And so it really is a stark warning to us. We did not handle COVID-19 well as a global community. And what we're talking about here in terms of the impacts of climate and nature, these have potentially far more devastating consequences than what we've experienced through COVID-19. And so we need to be very actively in this problem now and thinking very carefully about it. Okay, in terms of Africa, you can go to the next slide. Africa didn't cause the problem. Africa has very low emissions. We have 17% of the world's population, but only contribute 3% of global emissions. And so actually Africa, because we have low emissions and because we have some of the world's largest carbon sinks that absorb carbon, Africa is net positive. And an example is Gabon, which is already absorbing 1 million more tons of carbon every year than it emits. But at the same time, Africa is the most vulnerable continent. So you can move on to the next slide. And the rate of temperature increase across the African continent is greater than has been experienced by the rest of the world. And in Africa, we have 30 of the world's 40 most vulnerable climate countries. And those are all in sub-Saharan Africa, with drought being the main climate risk that we experience, and we're very familiar with that here in Kenya. And in the near future, climate change will also contribute significantly to decreases in food production, to floods and inundation of coastal areas and deltas, the spread of waterborne diseases and the risk of malaria, as well as changes in natural ecosystems and loss of biodiversity. And this is important because it has massive economic development and GDP consequences for Africa. You know, there's projections that by 2050, because of the consequences of climate change and the economic loss that results from disasters that are climate related, 30% of Africa's GDP could be lost. And so that is not only wiping out all the growth that would occur up until there, but it's actually reducing the overall GDP. And so that is a very frightening figure. And if you think that's maybe overstating it, some countries in Africa are already incurring losses of up to 10% of their GDP due to climate. And in Kenya, we should be very aware of this, because in the drought years, 2009, 2010, 2011, Kenya lost 11%, 7%, and 9% of its total GDP in those years. The other factor to consider is that 23% of Africa's GDP is dependent on nature. Sectors like agriculture, fisheries, food, beverages, and tourism are heavily dependent on nature, not only directly, but also through the supply chain. And so if we destroy our natural ecosystems, much of that economic activity will also be destroyed. So in order to solve this, finance needs to flow to these areas, but currently the very unfortunate situation is that only 3% of global finance flows for green come to Africa. That's mainly for mitigation, and there's almost nothing for adaptation. And so that is something that we need to change. It's something that we can change, and it's something that I want to come back to in this talk. But I first just want to stay with climate and explore a bit how this might unfold. Because as actuaries, we're concerned with the long term. We're concerned about how things play out. We're concerned with scenarios. I think it's important to start to think about what might happen from here onwards. And so on the next slide, there are three scenarios. They're very simple scenarios of how things might unfold in the future. And these actually are taken from climate scenario analysis done by the Institute and Faculty of Actuaries for pension schemes. And as I said, they're just three scenarios, and how it actually plays out will probably be determined in the next 5 years. And as we come to talk about these, maybe just good to define a few terms. So when we talk about climate risk, there's three types of risk that we're talking about. The first is physical risk, which is the direct impacts from climate on us. So, if you have a storm or a flood and it results in economic damage, that's a physical risk. Then you have transition risk, which is the risk that happens from transitioning to a low carbon economy. And also from mitigation and adaptation. And transition risk can be things like stranded assets. If you have a very quick reprice of, say, oil and gas assets, and the price drops, you may be left with assets in that space that are worth very little and that you cannot dispose of. Also changes in government policy and regulation that have impacts on your business as it relates to the way that you conduct it, and the assets that you're exposed to is also a transition risk. And then you have liability risk, where you can be sued and asked to pay compensation for the impacts on climate change that your business has had. So those are the three risks which are talked about here in these scenarios. And so we have three. They're each based on a temperature projection going into the future. So the first two are on the 2 degrees by 2100 scenario. But the difference between the first two is how we transition to a low carbon economy. And so in the first one, we have an orderly transition, which means that carbon intensive assets decrease in price gradually over the next 5 years, and renewable sustainable assets increase in price over the next 5 years. And so there's, it moves in an orderly way as things are priced in. And physical risk is not too bad. If we live at under 2 degrees, it's okay. I mean, there will also be some some extreme events, but it's not too bad. In the next 5 years, in 2024, in this scenario, there's a sudden reprice of assets in the market, and a sudden then sentiment shock, which then sees capital flooding out of carbon-intensive industries and into renewables, and that will then result in things like stranded assets. In the third scenario, we don't really transition. So we don't move to a low carbon economy, and we continue to emit as we do now. And so we don't really have any transition risk, but the result of that is that temperature increases by 4 degrees by 2100, and that will result in fairly catastrophic physical risk. And so as managers of assets, both for your own balance sheets and for third parties, it's really important to consider these. And so this was done for pension funds, who obviously have a fiduciary duty to consider that. But for all businesses, these are important risks to consider, because these aren't things that are far in the future. Some of these transition risks are likely to happen in the next 5 years. And in terms of the long term, we need to be moving our portfolios, both on the investment and the underwriting side, towards assets that support net zero. And we are beginning to see movement in this direction. So the next slide is saying that we are starting to accelerate towards this transition. It's not as fast as it needs to be, but it's starting to happen. And so what we see is that renewable energy is starting to become cheaper than fossil fuels. So solar and wind are now cheaper. And in 2021, for the first time ever, renewable energy technology spend will be greater than that in the oil and gas industry. And you can see the decrease in price. It's a levelized cost of energy for renewables in the slide on the left. What we also have is carbon prices increasing, where you have carbon markets. And so that graph on the right is the EU carbon permit price over the last 5 years. And you can see the real increase that is happening. And so in Europe, there's a carbon market which is created by the fact that companies have a specific allowance of the amount of carbon that they can emit. And if they want to emit more than that, they need to buy a permit for it on the open market. And so that creates a price for carbon, and that's what this graph is showing. What you also have is large write-downs that are happening in the oil and gas industry. So over the last year, BP and Shell have had massive billions of dollars write-downs in their valuations because of the transition. We also have changes in demand that are quite significant. And so big companies saying that they want to remove fossil fuel dependence from their supply chains. Unilever is an example, which is going to spend $1 billion over the next year to remove fossil dependence from their ingredients. And so there's movement towards this, but there's still lots to do. We still have 81% of the world's energy that is from fossil fuels. And so there is a lot that still needs to be done. We need to build the infrastructure for renewables in many countries. Kenya is doing well on that. And then we need to phase out fossil fuels driven by these by increases in carbon prices. And the financial sector has a very important role to play in that. And that's where it kind of relates to us. And so if you can go to the next slide. The financial sector, we're obviously managers of both capital and risk. And those are key functions in terms of being able to respond and move capital into areas that drive climate mitigation and adaptation, but also away from nature loss and towards a nature positive future. And so financial institutions largely determine the flow of capital, and so that's really important. You as an asset manager, both of your own balance sheet or third party assets, have an influence on how those assets are invested. And so, if you're a bank, you also can determine what you lend to. If you're an insurer, you can determine what you underwrite. And so whether it's contingent capital or non-contingent capital, there's a role to play for financial institutions in determining the flow of capital. And that can be moved away from carbon-intensive industries towards those that are sustainable. The financial industry also has an important role to play in creating the financial structures that are important for green money to flow. And so what we need are things like green bonds. We need ESG funds. We need the conduits for green investment to flow. And many of you will work for insurers, and there's a risk role that also needs to be played that's very important. And so, for any project to go ahead and attract investor capital, the risk return profile needs to be right. And so there's a de-risking role that the industry can play to create the right risk return profile for investment opportunities. And for insurers, your underwriting portfolio is also a powerful tool for influencing how capital flows, because often projects cannot go ahead without the right risk transfer in place. And so especially in the oil and gas industry, that's something where we as an insurance industry can help to minimize the opportunity for development in that space by limiting the underwriting that we provide. And a lot of the international reinsurers have already made significant commitments on this. And so you'll find that a lot of the big European reinsurers have said that even by 2025, they want to be net zero on their underwriting portfolios. And so for those of you that have high oil and gas exposure, for example, in your underwriting portfolios, you may find that in a few years' time, you will not be able to find reinsurance cover for those portfolios. Okay, so that's the role of the financial sector, which leads us to why this is such an important opportunity for Africa. And so we've talked a lot about the risks, but I also just want to, and then this is the main point of the talk, to say that there's actually a massive opportunity in the coming years for us as well. And there's several reasons for that. The first is that there is substantial global financial commitment to green. There are huge amounts of international capital that are committed to flowing into green investments. And so we have an opportunity to take advantage of that. Maybe just to mention, some of them is 100 billion a year committed from developed countries to go to green finance in developing countries. That was first committed in 2009, then ratified in Paris in 2020. There, in terms of that amount, it's probably sitting at around like 80 billion last year. But there's renewed commitment now at COP26 to reach that 100 billion. And actually, we need to go further than that. In order to reach net zero, developing economies need multiples more than that amount. But I think the point is just to say that this is a large amount of capital. It's going to increase. It's mainly from public sources, and so that's an opportunity. There's also private capital that is increasingly committed to net zero. And so in the lead up to COP26, Mark Carney convened the Glasgow Financial Alliance for Net Zero, which is a coalition of more than 450 banks, asset managers, insurers from 45 countries. And they have now at COP26, the cumulative commitment from them to green investment towards net zero is 130 trillion. And so these are very large amounts of capital. And we estimate that represents an investment opportunity for Africa of over $3 trillion only up to 2030. And so we have an opportunity to take advantage of these capital flows. There's a lot of money that's looking for green conduits, and Africa has potential to deliver a lot of those. You will note that if you're close to any of the green bond issuers in Africa, that every single sovereign and corporate green bond has been way oversubscribed. They've had to turn away many bond. And I think the other thing to say is that this is the best opportunity for Africa. There's a lot of research that's been done that shows that actually a green recovery pathway, building back better using green approaches, will result in better GDP growth. And so UNEP did a study specifically on Kenya that showed that by 2030, Kenya's GDP will be 12% higher on a green recovery pathway than as on a business as usual scenario. And so this represents not only an economic development opportunity, but also an opportunity for the finance sector to take advantage of. And we are actually at quite a unique moment because in the next year, the eyes of the world will be specifically on Africa. So we're at COP26 now in Glasgow. It's just been announced that Africa, Egypt will host the next COP27 in November next year. And so for the next year, with African leadership of the community in terms of climate, we have a specific opportunity to take advantage of that. There'll be a lot of this capital looking for African opportunities, but because of that, but there'll also be increased focus on Africa-specific issues, which are things like resilience, given the vulnerability of Africa, but also nature, as I've talked about. And encouragingly, we have really good progress on the enabling environment creation in Africa for green investment to flow. And so that's obviously, the governments and the frameworks are vital for that to happen. And there's been promising progress in that space. Many countries have issued their own climate legislation. Kenya being a real leader in climate finance space, having issued the Kenya Climate Act in 2016. There's also currently work undergoing on a green fiscal incentives policy for Kenya, which should see the light of day in 2022. That's something that FSD Africa is also supporting on. And there's increasing collaboration between African countries to create these frameworks. And so actually at COP26, 2 days ago, the African Green Finance Coalition was launched, also with the support of FSD Africa, which is a coalition of 43 countries that are committing to work together on a peer review mechanism on green policy and regulation to ensure that international standards are applied, and that with the ambition that by COP27, we've made significant progress in these 43 countries to create the right enabling environment that we're open for business in terms of green investment. And so I think I just want to say that we have an amazing opportunity, both in terms of timing, but also because of the growing commitment of these international capital flows. It's something that we need to take advantage of, and something which as actuaries we are well positioned to take advantage of. And so I think that's one of the key messages, is that this is a significant opportunity for us in this room, for those joining online. And I couldn't kind of appeal to you on selfish grounds on this, to say that actuaries in this space will be in extremely high demand in the coming years. But I think I'd rather appeal to you on more altruistic motives, that this is a problem that is super important, as I've been trying to articulate, not only for Kenya, but Africa and the rest of the world. And so it's something that we are obliged to be working on, because as experts in long-term complex risks, actuaries should be the leaders and should be the problem solvers in this space, because we have the skills to do it. We are good at figuring out complex problems, and this is one of the most challenging and complex. I personally don't want to say to the next generation that I was aware of the significance of these risks, that I had the skills to do something about it, but that I did nothing. Also, as Africans, I really believe that and I'm South African, by the way, that we need to solve our own problems. And we are sitting in one of the most vulnerable places in the world. We are going to be exposed to some of the biggest impacts, and so we have the best incentive to solve these problems. And so I think we shouldn't be waiting for actuaries in the North or the developed world to come up with these type of solutions. We need to be figuring them out ourselves. And so I've got a couple of things to say just in terms of takeaways for how actuaries can be involved in this. And I know Moses started with talking about some of that. We'll talk about it more in the rest of this convention, but just a couple, and this is not exhaustive. And I think the first one, which is something that everyone can do, everyone here, everyone online, is to be a change maker in your own organization. So if your organization does not have an ESG strategy or framework, if you're not considering climate or nature-related risks as an organization, if it's not part of your long-term sustainability strategy, then you should be advocating for this within your organization. As someone who's able to understand this long-term risk, is able to articulate it, you should be going to your CEO and saying, we need to set up a sustainability committee. We need to be driving this forward. If you're the CEO yourself, then you need to be setting this as a key part of the agenda. And so I would just encourage all of us, let's do what we can in where we are with the resources available to us, and be change makers in our organizations, because there's urgent action that's required in order to deal with this long-term risk. Then also, we obviously, as actuaries, have the technical skills to be able to contribute a lot to this space. And so, understanding this risk is a key area. There's not a lot of understanding because it is so complex. There's so many dependencies. And so with our skills in modeling and scenario analysis, this is something that we can seriously contribute to. As Moses mentioned, product development, where a number of you will work, is a key area, both on the investment side, on the underwriting side. We need products that speak to mitigation. We need products that speak to resilience. And then a number of you also work in the regulatory space, and our IRA is also sponsoring this, and we'll have a session tomorrow on regulation. But we need to be putting in place ESG regulation that enforces this within markets. Not every firm will take this up on a voluntary basis, and so we need to be driving it from a public side as well. So those are just a couple of ways which actuaries can be involved. And as I close, just want to say that FSD Africa is here to support. So we are a specialist development agency, and our focus is on economic development in Africa. So that's what we're concerned about, and a lot of our work happens in this green space. We want to strengthen and expand the pathways for sustainable investment in Africa, creating the conditions for green finance to flow in greater quantities and with more impact. And so we're doing a lot of work in this space, and there's not enough time to talk about all of the different types of initiatives, but I just want to mention a few that relate. And so the first is that we launched the Nairobi Declaration in April this year in partnership with UNEP, Principles for Sustainable Insurance, and ICA Lion. And that is a declaration specifically for the insurance industry, committing it to act towards net zero on both on the asset side and on the underwriting side, and to work towards sustainable development. And so we are encouraging African insurance organizations to sign up to this. And then we're not just kind of leaving it there, but we want to then move from talk to action. And so as FSD Africa, we are supporting firms in creating a roadmap from how do you go from not being on this sustainability journey at all to actually integrating it into the core of your strategy. And so that support is available. We also, for actuaries, want to catalyze involvement, especially here in Kenya, for all the reasons that I've spoken of this morning. And so today we'll be launching a task force on ESG, and an email went out to task members this week signing up for that. It was way oversubscribed, which is encouraging. But really our ambition is that in the lead up to COP27 is specifically that we identify the sort of the areas where we can make the most difference, and really sort of put some solutions into the market. And as a development agency, we are available to support with some capital on that. And the first meeting of that task force will happen later this month, hosted by FSD Africa. And we are looking to be very ambitious with what this group can do to contribute to this global challenge. Then, just very briefly, our mandate is market development. And so in this green space, there's a lot of things that we're doing. We're helping with green capital market development, green bonds. We assisted with the green bond issuances, both sovereign and corporate here in Kenya, as well as in other countries. We are very involved, and specifically my team, on de-risking. And so that is things like creating underwriting pools that de-risk investment in renewable energies. We've just launched a project to create an underwriting pool here in Kenya with Kenyan insurers to de-risk early stage development drilling for geothermal energy, which is it's a big potential renewable here in Kenya. And we also work on things like credit enhancement guarantees for debt investment. So, to create the right risk return profile for debt investors in green investments, especially when they're doing it for the first time. Things we work on the enabling environment. Elias from my team is here, and he'll be speaking on that tomorrow. We also provide technical assistance to innovative product development in this space, and we support initiatives on data like the Task Force for Climate-Related Financial Disclosures, the Task Force for Nature-Related Financial Disclosures. And so there's a broad range of work that we're doing, but we're mainly here just to support. We cannot do it alone. We need the industry to drive it, and we need experts in the financial industry like yourselves to be heavily involved. And so I think in closing, my message to you is let's work together to create a sustainable future for us all. Thank you very much for your time.